Good afternoon, everyone. Hope we're all doing good. It is a good afternoon. 100 people for the FOMC live stream. Nice. Got ourselves a full house here. Hello, everyone. So I just want to make sure that you guys can hear me and that you guys can see the NQ 15-minute chart. All good? Awesome. Thank you, guys. Just saw your question, Matthew. Are you trading with small risk today? I'm not trading at all today, bro. Matthew, my man, you always got some good questions, bro. Rich, howdy, howdy. Earl, awesome. Hey, Jonathan, what is going on, brother? Good to have you. Tyler, Anita, Sergio, hello, hello. Glad to have you guys here. Jess, hi, hi. Olawale, Earl, good to see you guys. Jonathan, bopping his head. My man Jonathan, always jamming out to the music. All right, guys. Satish, Anita, hello, hello. Rich, Satish, Joe, Jack. Awesome. Glad to have everybody here. Got the usual suspects in the room, so glad we're all doing good. Grisha, greetings. Jordan, you said no trade today. I said I'm not giving financial advice. I will take you guys right back to the disclaimer I just put up. Today is not the day to mess around and find out. Right? Got to keep it PG here so I don't get in trouble with YouTube. But you guys know what I mean. So read the disclaimer. I'm not giving financial advice. If you do something today, you will take 100% accountability for that. And I am not telling you, tempting you, hinting to you in secret coded language to buy and sell, especially not on a day like this. Because if you're still trying to find who's hot on YouTube for your trade ideas, you probably don't know what you're doing. And today's not the day to push it. So just be patient, just hanging out over FOMC price action. But real quick, so we got about 5 minutes until the roller coaster carnage and the carnival-like atmosphere begins. So with that, I do want to share some exciting announcements with you guys. As a token of our appreciation for all your guys' support, and again, I want to say thank you for all your guys' support, allowing us to grow as much as we have in such a little bit amount of time. And I know that's a testament to, again, our community, you guys that support us. And again, I just want to say thank you guys for making our team great and for all your guys' support. So the token of our appreciation, we're going to be doing two 50K account giveaways on Topstep, which will be announced through our social media. And then the winners of that giveaway will be announced on our Sunday live stream. So again, that's a token of our appreciation for all the countless supporters we have here. And again, just to express our appreciation for you guys. The other big announcement that we have today is Signals is live. So we were planning to open it February 1st, but we're here on YouTube. We already had it open, so that will be open for you guys to get in and enroll. So that's starting today, officially February 1st, and we will begin officially signaling next week on Tuesday. So everything will be sorted out over the weekend, get you guys into the Discord channel that you guys need to have access to, and we'll get to work on there, and it will be just lovely. So with that, that's all the announcements I had. Abraham, if I'm missing anything, shoot me a little reminder, bro. But I think that should be everything. All right, guys, awesome. So about 3 minutes, and then like I said, the roller coaster ride is gonna begin. Momentum Trader, welcome to Plus Adora. Appreciate your support, Tyler. Much appreciated. Thanks for all the insights. Absolutely. There are SMT on both sides. Yeah, we'll go ahead and get into that. So let's go ahead and share my chart. See what we're looking at. So I'm getting to my charts for the first time today. Was not looking at much this morning, so I'm going to go ahead and show you guys the FOMC routine. So higher time frame PD arrays, what have we been doing on the daily chart, right? So typically FOMC is going to be a disruptor, meaning it's going to typically, not always, move against that higher time frame order flow we've been seeing, and they're going to use that manipulation to run on the sentiment we've been seeing. So right away, before we get into it, I have ES on my other screen, so I'll just have to toggle back through that. right away, looking at, it is 50-50 for right now on that daily chart. We have smooth highs here and smooth highs down here. Gun to my head, all this liquidity here is too juicy, and then we have these smooth lows here. So on my other chart, I have this marked out as sell side here, and this marked out as sell side. So that's what I'm favoring or run into right at the open. What they do after that, we'll have to see. So I favor a run down into there, and then how we trade there. Do we trade lower, trade below these lows, reject, and run higher? Who knows? I'm just going to be watching, again, using this opportunity to get more information going into the week to come. Dollar still in its range-bound consolidation across that daily chart. So not a whole lot of help on the inter-market analysis front. So these are the levels we want to be watching on ES. NQ's already inside of its daily fair value gap. I'll show you guys what that is here. And then we'll be interested to see, do we want to drop lower into that fair value gap, or do they rip it higher? I don't know what they're doing right at the interest rate announcement at 2 o'clock. So what they do with that, I wait for more information. I do have clarity on the marketplace typically at 2:30. So once I've had 30 minutes behind us, see what they're doing, see what liquidity, see what inefficiencies left in place, then I typically am able to go in and see some type of price run that I'm able to expect, right? Which is what trading is, right? We're anticipating a price run to either some level of liquidity or inefficiency. So that's what we're going to be going in studying today. So let's go down into our 1 minute chart and watch the fireworks. All right, so they're sending this thing lower here on ES. So what we want to do for FOMC is I drop a line right on 2 o'clock. Anything before that, I'm not really concerned with. I'll look at the liquidity that's there, but in terms of time, whenever we start FOMC, I drop a line right on 2 o'clock, because then that's going to allow me to have a feel for the opening price. So I always like some type of opening price when I'm trading to either be buying in close proximity to, selling above, or buying below. That's why I use 2 o'clock, that specific price on FOMC days. So I'm going to be monitoring that moving forward. One sec, let me. Handle something here. Christian, how can I sign up to win the 50K giveaway? Christian Cadet will be done through Twitter and Instagram. More info will be posted. Appreciate it, Denisha. No fireworks. Kevin, let's go ahead and see what the ES is doing. So ES is trying to run lower. So again, we just want to wait I'll let the first 30 minutes pass. Again, there's no real rush to get in here. So like I was saying, we're going to want to watch the sell side here, and then how we trade through that will be influential. As to whether or not we want to run for these relative equal lows here. But again, just based off the present market structure, again, I'm just favoring a run into these lows here and here, just like we were expecting ahead of the announcement. But again, big teaching point here as well is, even though I can see they're likely going to want to run it to the sell stops here, I think that's a level, again, we talked about before 2 o'clock. And, the fact that it's, running towards it isn't random, right? So we're able to see these things. But here's the catch on FOMC, right? We can see the levels. We can see where it may want to draw to, but they could have very well just as easily taken this thing higher, right? And then be completely incorrect. There's no guarantee that we have to reach these levels as well. But what it is that I'm doing on these days is it's a great study of liquidity and how they utilize and run on that sentiment. So it's a great day to study, observe, and just get more experience. But here's where pushing the button becomes difficult, because like I said, we could see this run lower into that 48.89 level. But how do you position yourself? How do you manage risk? In manual intervention, which that's what this is, right? This is not the algorithm repricing the market higher and lower. This is human manual intervention, which they will typically run through levels that we would expect to be respected or not be respected, right? So it what I'm getting at with what I'm saying there is how they deliver on these days will typically deliver outside of the bounds that we would expect to be reasonable. So the main point is, how do you position yourself and manage risk on a day like this? I can't with a high degree of confidence. So that's why I don't trade it, right? So let's go back to the 15-minute. So if this thing's going to run lower, I'd rather see it do so from this fair value gap in here. Go to the hourly. So they're taking dollar higher. So that's something I'm further watching. All right, so what we're going to be watching here on ES, normally I'd be watching NQ, but ES still has those levels that it's hasn't reached yet, whereas NASDAQ already has. That's why I'm just focused on ES right now. I have it on my other monitor, but just for the sake of showing you guys. Daniel, did you trade the AM session? No, I did not. I did not participate in anything today. So again, this is the fair value gap we're watching on the M1. Just watching, right? No trade advice. But one thing I think is interesting is how they stabbed it lower, and then they left all these relative equal lows here intact still. So that to me indicates that it's likely going to warrant a deeper run down into these levels, because what I'm looking at this as is they're trying to sell the idea of support, right? You guys can clearly see how we can draw a smooth line from here. So retail's looking at that as support. So keep in mind, guys, I know there's many new people here as well. I'm not putting these lines on my chart as like support, right? When I'm looking for a low to be traded to, it is not trade to that low, look for a bounce support. I'm looking for it to rip through that low and aggressively attack all the foolish traders that have stop losses at those highs and lows. Do not confuse what I'm doing with anything support or resistance. I'm looking for the market to bust through these lows like the SWAT team. Not, oh, we've hit that level before, so we're probably going to bounce again. Absolutely not. The market's going to trade to and through those liquidity pools. So again, 1 minute fair value gap trading, hitting that midpoint. Like to see that signature right there. The fact that we were unable to get above that. I want to see if we're able to accelerate lower into the sell side. Jonathan, he's calling the central banks. Yeah. AD Maria, Carla, Papa Vlad, hello, hello. Jose, saludos desde España, maestro. Un gusto, Jose. So 15-second chart. Let's see, better communicate on a 30-second. Don't really see that there. So what I'm watching right now is this fair value gap here. Does the market stay below that? So that'd be like an inversion. But again, the typical precision we have just isn't there on a day like today. So do not put too much weight into what I'm saying, because if it was high probability, I'd be right in here trading it, right? So just watching. Let me put that level back on there. So we want to see if we see a willingness to sell off from that inversion gap. Be interested to see for dollar, because I have been eagerly anticipating the dollar leaving this consolidation. Which news driver are they going to use to take it out of this consolidation? Would it be FOMC today or non-farm payroll on Friday? Not sure. Something I'll just have to wait for, but we'll see how today trades and then how we look going into the remainder of the week. Because what I'm looking for clarity in is for the next 3 weeks of trading in February, right? I want to trade the week after non-farm payroll. So I really use this week to gather more information as to what we're looking at in terms of a monthly expansion, weekly expansion, quarterly shifts, all those different things are what I'm really weighing out this week, right? So it's a lot of gathering information to prepare myself for the week to come and a lot less trading. Walter Dylan, what do you think about ICT saying that he got stopped out because the market makers were watching his live stream? Yeah, I don't know, Walter. I don't really give too much an opinion about that stuff. If it's not helping my bottom line, I'm not paying much mind to it. Who knows? Is he trolling? Is he just messing with people? I don't know. I don't really care, right? ICT's living his life. He's doing his thing. I'm here doing mine. So just chilling. Ricky Rod, Dylan, hi Dylan. Appreciate the knowledge you've been bringing to us. Quick question: are days like today a two-stage delivery? Yes, that's what I typically expect. So with FOMC, non-farm payroll, typically the first move is typically the fake move. So that's what I go into this day anticipating, which is why I'm painting the idea that what we could possibly do. I don't know. I mean, this thing could just keep washing out, all day. I don't know. I'm not saying it's a high probability setup, but I'm just interested to study. Do we run below these lows, reject, and trade higher? That would deliver with that, in line with that two-stage delivery narrative, or are they just going to consolidate it here, run it up above the stops one more time, and then take it lower into the equal lows? I don't know. And because of that uncertainty, there's a reason I'm not here again pushing a button right now. All right, so looking at the 5-minute chart, they opened, took it higher, relative equal highs, so they cleared out those stops. Right? So anyone that was short and had a buy stop, they were taken out here. So I want to see, do they want to rake them across the coals and run it to the sell stops? Benjamin, sign up tomorrow for signals. So yes, you can sign up tomorrow, but again, I did announce at the beginning of the stream that we have already opened that up. So for those of you guys that want to get in there early, ahead of February 1st, that subscription is open on our website, adoratrading.co, where you can just check the link in the description. I believe it's there. Abraham, we got the website in the description, right? Dylan, your voice is kind of quiet. I'm not sure, brother. Everything or lady. I'm not sure. I can't tell by the name. Everything looks good on this side. Everything looks good on this side. Yep, all's good. Appreciate you, bro. So I've seen times in FOMC where it's just a really nice runner that'll run it lower or higher, and it'll just be nice, clean price runs the entire afternoon session. And I've seen times where it's just a flop, right? Well, it'll just do a drop, consolidate, then start running, and it doesn't really do a whole lot. So again, that's another one of the reasons behind the underlying uncertainty, just like today, right? I'll go ahead and cover that with you guys now while we're in this little chop fest here. But again, the draw remains down here in the present market structure. You know, what that means for you, I don't know, right? It's nothing I'm putting risk on. But looking at the morning session today, one of the reasons why I don't trade it, you know, if I was trading it, if I was, you know, watching price, would I have liked to have I think I would have been able to see this move? Probably, yeah. But it's the nature around the delivery today as to why I don't like to trade it, right? So it's not that I can't see price levels, right? But it's about, can I position myself and manage risk to the levels I'm expecting it to deliver to? Remember, in the mentorship I'm teaching you guys, you know, remember what I had as a realization early on in my career, which is, you know, the market doesn't always really give a shit about your draw on liquidity. You know, you can see where it's going, but if it's going to chop, deeply retrace, stop you out 3 times, and then goes to that draw on liquidity, does it really matter what your draw or where your targets were? Not really, right? So that's something I learned early on. And it's really, again, the delivery around these days. Can somebody trade that and make money? Absolutely. If you're experienced, if you're well versed, then, you know, have at it, right? But for me personally, for me as a trader with what I'm looking to do, if I know there's better days coming next week, there's no reason for me to risk my money on a day or a week like today, right? So that's my thought process. That's how I go about it. You know, teach their own, right? Everyone has different things that work for them, and just sharing what I'm doing and what brings me my success. The Sandman ICT said the thousands. Yeah, I don't know. I don't know, guys. I'm not sure what ICT's got going on there. You know, Jeff's voice is signed from my side. Awesome. His voice is loud like a roaring lion. Jonathan, you always crack me up, brother. Oh man. McTony's, how do I join your community from Africa? Nigeria, precisely. I try to pay with my card, but it keeps getting rejected. I'm not sure, McTony's. There's no restrictions on people signing up from around the world that I'm aware of through Stripe. So everything should be good there, brother. Just make sure everything's correct with the information, the address, and you should be good there, McTony's. But if you guys have any specific technical support questions or need any help in the process of starting your Signal subscription, just reach out by email to our lovely support team, who'd be more than happy to attend to that, and they'll get you all squared away. All right, so right now, from what I'm seeing on a 5-minute chart, market's still looking weak, right? Tried to trade back up into that 1 minute fair value gap, failed, broke down. Now we have another fair value gap in here. So do we sell off and run to the levels that we were looking for on the downside from here? That's what I'm favoring in the current structure. I see a few questions in terms of what signals is. I would refer you guys to check the website because that's where all the information's at, right? All the accurate information, everything you'd want to know about what we're doing, how we're doing it, what's going to be covered. All that is articulated through the website. But yes, so signals are absolutely starting next week. Yes, once we open the floodgates up for you guys to join, we are signaling. So starting next week on Tuesday. Let's go to a 5-minute zoom out. Why not paper trade and teach the concepts regardless? Just because if I'm paper trading, that's going to make other people feel incentivized to take their own trades, maybe trading live money because it's something I'm willing to take. And just because of the nature of today, it's just something I'm not willing to open myself up to. You know, I know there's a lot of irresponsible people that don't want to take responsibility and would use whatever I'm saying to justify why they took a loss. And I am not going to make the platform for that, especially on a day like today, right? So, but if that's something you'd like to do, I'd join your YouTube channel and watch you paper trade today. Yeah, I'm not sure about the volume. Everything should be good. All right, so back down to the 1-minute chart. Again, still have this sell side here that I favor. And then if we start to trade aggressively through that, then we have the sell side down here in the 70s. All right, so the real action, again, like I said, it's really going to get started here at 2:30. So 2:30 is when I'll expect the market to start moving a lot more. But again, still respecting the levels that we've been looking for, right? The 1-minute fair value gap, trade up into that, sold off once more. Took your attention to this fair value gap, said I'd like to see it sell off from here. And we just want to see a continuation of the bearish order flow to run lower. Going back to the hourly chart, like I was saying, whenever they stop just short of that low here and then retrace it all the way higher, they're trying to sucker, again, people into thinking that we've seen some type of bottom, right? That there's like support coming in at that level. So whenever they make that low here and then retrace it back up, that's getting people to trust, right? To feel confident that from a retail perspective, that they can buy at that level. Because look, it bounced from it. Zoom out. Look, it bounced from that level once here before. It bounced from it again. So that should mean what? Buyers are coming in strong, right? So the buying pressure is going to take this thing back up to all-time highs is what they're thinking. We are not thinking that, right? We're looking for it to rip aggressively through that sell side, as I've mentioned. So first would be just this low right here. Their sell stops right below that low because when they retraced it higher, people are trying to buy, again, anticipating this being some type of bottom. It says on the first downside target, we have these stops right here. There we go. Thank you very much. So there's that sell side. Now we should accelerate aggressively through that low and then make a run down for that sell side. So, just for study purposes, if it was, again, like a trading day, we have 10 points right here, right, from that fair value gap, which would have been a theoretical, entry if we were trading, or if I was trading, that entry there short, and then just 10 points right there. So if that was a trade, the trader would absolutely be paid, right? Because we had to run below new lows. And while this would be a best case target, we wouldn't even need that to be profitable, right? So that's what profitable trading looks like, paying the trader on the way down. And you don't need the best case target to find profitability. What you said just now is flying by people. It's all right. When the student's ready, the teacher shows up, right? So whoever needed to hear it will hear it. Yeah, smart money is buying there. We'll see. We'll see. Really trying to get a gauge for dollar. Seeing dollar likely going to run up higher into its buy side from what I'm seeing presently. The fair value gap is so big though, even if I was trading bad RR. Yeah. That's just where experience comes in, right? So when ranges open up, there's gonna be times when, maybe your max stop is like 5 points or whatever, which it shouldn't be because Matthew, that's what they have micros for, bro. So like if you needed a bit bigger stop, they have micros for a reason. But like me, I wouldn't trade micros with where I'm at now because it's just not a proper use of my time. But early on, micros are absolutely helpful again to learn. But whenever there is a big fair value gap like this, Matthew, one of the things that help with entries is you may not get tagged in, which is one of the downsides of entering like this. But waiting for that midpoint and selling right on the touch of that level, and then with a stop above the fair value gap high, that would be another way to position yourself, if this was, obviously something that was worth trading as we covered. But there's different ways to enter, but there are times when the ranges are going to be a lot bigger, just inherently bigger range days. So, just the fair value gap may be 10 points on ES, right? Maybe that's bigger than your risk parameter. So if that's the case, well, then you just have to pass up the trade, right? But what you can do is you get better and you understand how to read price action more proficiently. You can wait for it to hit that midpoint and then just sell short right there. And then that would be a reduced stop from here to wherever the invalidation is, as opposed to the entire range of that inefficiency. So that's something that'll help you out moving forward, Matthew. In CFD terms, how much would you close off a position once take profit one is met? Is it 50 or 25% or less? Yeah, so that's a really good question, Jonathan. In terms of like trade management, that's something, again, we'll get into much more extensively. But it depends on a lot of factors. You know what I mean? Like the day I'm trading, like a day like FOMC, I would be much more aggressive about taking partials and paying the trader on a day like today where there's just so much more uncertainty. So, but on a day where, let's say everything lines up, right? I know where the weekly chart's going. I know where the daily chart's going, the hourly, 15, 5, everything's just firing on all cylinders. Well, then that's a day I'll be much less likely to take off partials, right? And I'll just take off maybe 10%, 15% in partials on the way up and then hold for a full target. So it depends on a lot of things that are really determined by that experience factor I constantly bring up to you guys. So with experience, you'll know, like, all right, this is a day FOMC, right? So it's more likely to do what things I wouldn't anticipate. So what does that mean? Take partials more aggressively. on another day when it's just a regular high impact news driver, right? Where everything aligns as I painted to you before. Well, that would be a day I would be taking less off at TP1, TP2, and just holding for take profit 3, right? So it's really all those things that are going to help you come to that conclusion yourself. Hopefully that helps you. Instead of just saying, yeah, 50%, I could give you a fish, but if I teach you how to fish, you got food for life, brother. So hopefully that clears up your question, Jonathan. Matthew, it's not about micros or minis, but I meant like 1.5 risk reward. Gotcha. Yeah, absolutely, Matthew. And that's, the big thing about trading, right? We all have different systems, different, risk thresholds, RRs that we're looking for, whatever the case may be. So why trading is typically an individual sport, and some people do really well with fixed risk reward. Some people do it dynamically based off obviously the levels that we have as targets. All those things can be measured. Earl Garrison, there are 6 thumbs up down there, 170 watching. Hit the thumbs up button, please. Absolutely. Yeah, please, again, help us out here with the stream. Doesn't cost you anything, but it helps us out greatly. Julio, why does the DXY daily chart look like my eyelashes? Yeah, brother, it is abysmal. But it all goes back to I forgot which Sunday live stream we did that. Remember I pulled up the seasonal tendencies for the month of January across several asset classes, and we were looking at it. So it's to be expected, and I was seeing, again, just all through Twitter or FinTwit, I think they call it, but different social media places as well, where, man, it was just a bloody month for currency traders, and people trying to trade currencies in general. And it makes sense, because of everything we were seeing in the dollar. But, the nice thing is, hopefully what should be reassuring to you guys is that we weren't, caught off guard by it, right? We were just waiting for the consolidation to finish, get into the month of February, and then we'll just trade when everything's clean, right? We'll leave the consolidation to the uninformed gamblers, right? They can have that. Do you play US 30? No, I don't like to touch the Dow. I don't like the Dow a lot. I like S&P and NASDAQ. AJ, shout out to you, Dill Pickle. Appreciate it, AJ. I know I know the currency traders were really loving this month because all the other action hound, communities and whatnot are all trying to trade, trying to make something happen in a market that's just not going anywhere, and it's unfortunate, watching everyone bleed away their hard-earned money, right? So, case in point here, Jonathan, we were just talking about the partials, right? I mean, for all I know, they can just take this thing higher and just run up a new high, right? So because of all that uncertainty, what's the picture I painted for you? If this was take profit 1 down here, on a day like today, I'd be scaling off near 50%. On a 10-point run on FOMC, a large portion of my position would be coming off. Why? Because of the inherent uncertainty on a day like today, right? So it's never fixed, right? It's never, well, at least for my trading, it's never just take profit 1 is always going to be this percent. It depends on a lot of factors, right? And namely is experience. Wassim, it was hard in NQ. I can't imagine Forex. Yeah, I feel bad for the Forex folks. Well, not for the Forex folks that were here, because the Forex folks part of our community, you guys already know what's up. But for the Forex folks and other communities that are, promoting nonsense, man, good luck, man. And the year just started, right? We're in January and people are already in severe drawdown, right? That's really unfortunate. Dylan, what do you think about crude oil? Crude oil, I was incorrect on crude oil. I was looking for the market to run up into the daily highs. And take a look at crude. So I was looking for, and not to say I can't still do this, but I wanted to see it run up into the buy side here. That's what I was favoring. So I wanted to see this daily candle expand higher. And, you know, again, there's times I'm going to get it wrong as well. So what I was favoring was looking for a Tuesday, like low of week. And I would have liked to have seen this clear out the stops. And again, all the confirmation was there. So just like I, teach my students, there's such things as good losing trades as well, right? So if everything's there, if the model's there, if the bias, the narrative, if everything aligns and you take a trade and it ends up being a loss, that's part of trading, right? So I was looking at this as we traded lower, cleared out the stops here, made that low a week on Tuesday, and then we got an aggressive expansion repricing higher. So I would have liked to have seen the market be supported here at these discount arrays and send us higher into, again, just a daily buy side here, but it ended up denying me that. So we'll have to see where they want to take crude oil. But looking at crude right now, we got a lot of sell side below here. So that's acting as a strong draw as well. So I think before crude oil goes parabolic and they just take this thing to the moon, I would prefer to see them run out. If I was making the market for crude, I would run it below these lows, absorb that sell side at time of year, which is February, when we typically, February into March, when we make a significant turning point for the year, run it down into there and then take it higher. So that's what I'd be favoring on crude, but I'll just take it day by day. All right, so case in point right there, Jonathan. So if I was taking the setup, how would I manage it, right? Because of the day, like I covered, a lot would come off at TP1. So there's that real-time learning experience, right? Since when are you trading? So I've been trading for 4 years now. So again, this is just a typical part of the tomfoolery, that occurs on a day like today, right? If there were any other day, the draw's lower, clears the stops, this thing's going to be off to the races. But because it's a more manipulated day, that's why I'm not trusting that as a short and feeling confident that it's not going to run back up in there, just because of that uncertainty. Like I told you guys many times before, I am not here to gamble or risk money when there's nothing that's just one-sided and obvious in a high probability day. Which month is what covered, Jonathan? Oh, is it trade management, money management? Which of those two? So I'll be interested to see this fair value gap here. See if it wants to act as resistance here. Might just run off without, but I'll be interested to see if they want to hit that, bump that level, and then drop it once more. That's what I'll be interested in seeing. Partials. Okay, yeah. So trade management. Yeah, we'll definitely start covering those topics once we get into month 3. Start month 3, but then from there that'll be covered month 4 through 12. So you have 8 months of the 8 months of the again, hands-on teaching, right? First I got to teach the basics, teach the language, teach what it is we're looking for, what we're even doing, right? And then once I cover that, then we'll get into, again, now how do we engage with this logic that I've been teaching you guys, right? So we'll get into that really starting in those months, Jonathan. But really, just having that understanding of price action, just watching the markets, understanding, the things like I'm weighing out here, right? When I'm talking, it's not really because I like to hear my voice. It's because it's things you need to be paying attention to, right? Like what day of week, is it a difficult market? Is it an easy market? What constitutes a difficult market? What constitutes an easy market, right? All those things we have to consider as money managers. So like looking at my calls as skill or not skill on a day like today, that's not really the point of why I'm here, right? Just hanging out with you guys. Again, told you guys my original opinion, which is I wanted to see the market run to these lows, right? But case in point, very difficult market environment today. So one of the things I do like about FOMC when I would trade it before, now I don't have so much interest in trading it, because I just respect the risk a whole lot more with the capital I'm managing. And that's just where I'm at as a trader. But what I do like is that last hour on FOMC. I like to see what they do in that first hour. So from 2 to 3, and then 3 o'clock, usually that last hour gives a really nice hourly expansion on that last hour candle. Now I'll typically trade that last hour candle in from 3 o'clock to 4 o'clock. So that's what I'll stay on here with you guys with, hang out and watch that with you guys. So seeing dollar starting to wash out to the downside now, which is why we're seeing a lot of this lift here in the stock indices. So something interesting to note. So ES ran lower, ran the stops once more, which is why that would be a key level for partials if someone was trading there. But look at NQ, right? So NQ did not, take this off. NQ did not make a lower low here. So ES took out the AM session lows here. NQ was unwilling to do that, right? So that's indicating something to me that I'm watching across my other monitor. So right now in the present market structure, we're seeing relative equal highs here. So that's what I'm looking for. Just calling levels for you guys. Again, nothing to constitute taking a trade on. So we have these equal highs here. So what was the first run today? It was lower, right? So they dropped it at 230. So that would be like the fake move, right? Or like the Judas. And now we're seeing the true move, I guess, in parentheses, unfold. And that's what my analysis is indicating to me right now. All right, so we'll go to a 1 minute chart. So we have the buy side here and here. So as a draw on the upside, we have that right there. All right, so there's the buy side on NASDAQ. Now we have that second stage of buy side there. Rich, this is a weird one. My 159 candle on 1 minute ES has a much longer bottom wick. Low is 40. Yeah, that's strange. Yeah, it's like a... Yeah, that's strange, Rich. Yeah, I'm not sure why it's doing that. Yeah, it's probably some type of trading view glitch, I would say. So, yeah, so we're poking into that regular trading hours. Again, I have that on one of my other monitors. We'll go take a look at that now. So we have this huge gap in here. We'll want to put quadrants on that for upside targets. So when we close the previous day to where we open today, then we'll want to put some quadrants. Extend lines, right? And then we'll go back to electronic trading, but keep in mind what this Fibonacci is encompassing, right? This entire inefficiency from this close to this open. Right. So there's our buy side. So there's the equal high there and here. So again, one thing to keep in mind as well is, you know, the difference between calling levels and trading them is two things that are very, very distinct, right? Calling levels is something that's not easy to do because a lot of people can't call levels, especially, you know, outside of the fold that we're in right now, right? A lot of people actually do have a lot of difficulty calling levels. So I'm not going to say it's something that's really easy, but calling levels isn't hard to do, right? We saw the highs here, ran up into those, lovely. But trading on those levels is something that's totally different in and of itself, right? So there's not much to think about me getting it right or wrong today. Again, this is not the day to pull out the measuring stick. So what I'm watching now, so we've traded up into the key buy side levels here we were watching. Is the red lines new week opening gap? No, the red lines are what I covered here, bro, right? It's just the buy side on a 15-minute chart. I don't have new week opening gaps on the trading template I'm on. I have that on something else. McTony's accounts are literally getting ripped to oblivion right now. Yeah, absolutely. Yeah, it's pretty brutal. So we have consequent encroachment, which is that midpoint right there, 483.50. Look at that level on the upside. There we go. And then how we trade there is significant now. So we're at a key level. I'm going to go ahead and take off these buy side targets now that we ripped through those. So on the upside, how much further can we go, right? I painted the narrative that we have. This gap here, right? So there's two things, again, the market's going to reach for. That is liquidity, which is what's resting above these highs here, and this high here. So it's running up for the pending orders in the market. But the other function is to offer efficient delivery, right? So what I'm looking at here is this entire inefficiency. So seeing how it wants to drop into those levels, especially the key levels here, which are the quadrants. And seeing how we trade at that midpoint, all those things are influential in my analysis, right? Do we close above that midpoint, right? Do we hit that midpoint and then reject and sell off hard and use it as like a ceiling or like resistance? All those things go into me reading order flow real time. We'll take a peek here on ES. You'll want to have this gap here on the upside for ES. So what I'll be interested to see us do is, do we get above that gap, use it as support, and make a run for these equal highs? In the present market structure, that's what I'm favoring right now. So again, two-stage delivery as we were talking about before. 2 o'clock does what? The fake drop lower. And then at 2:30, that's the time I told you guys, when does the party really get started? 2:30. And then 2:30, we see that true move. So what I'll be interested to see is, do they want to run it up into these equal highs? That's what I'm favoring. There's a lot of buy stops above here from people that are trying to call it top in this market. So that's what I'm looking at here. Pretty interesting reaction at that consequent encroachment level, right? It's almost like this stuff's random. So when does the signal service start? Just check the website, bro. It's all going to be on there. So we're starting February 6th. It's starting. It's open right now for enrollment. Cobra, first move is the fake move. Then 2:30, the tsunami comes. ICT. The man, the myth, the legend. ICT. Absolutely. So let's go up to our 5-minute chart. So NQ, we have these smooth highs up here, but let's go all the way out to an hourly chart and zoom out. Let's put on electronic. So one thing that I noticed was interesting was how they left the buy side up here. So they left all these highs stacked, right? So this isn't something to me that articulates a top or constitutes a top in the marketplace. I think this is just trying to get people to see this as like a top, retrace it, clear out anybody that was long and had a stop loss. Where would their stop be if they're long? Here or here, right? What do the books tell them to do? You have to jam your stop above the most recent swing low, right? And that's what they're doing. They don't really know what they're looking at. Market runs down, stops them out, and then potentially run to the buy side. So again, just painting the different scenarios that I'm looking at and I'm considering in my own trading. But again, this is all just observations, all just me getting more information, right? Nothing for me to really push a button on. But what's really interesting, again, is the reaction we get off these levels, right? None of the delivery here is random. So if I was long, if I was expecting it to, while we were down here, right, expecting it to run into the buy stops here, all those would be partials, and then that midpoint would also be a partial as well. And you guys can see the levels we typically take partials from, they usually make what? Really nice turning points, right? Because it's almost like we know what we're doing here. All right, so 5 minutes. Let's trading into this FVG here. So what I'll be interested to see is how do we trade inside this fair value gap? Denisha took demo trade for today. We'll make notes later. Heading out for a bit, Dylan, but if you need me, you know where to find me. Absolutely, Denisha. Have a lovely rest of your day. So this reaction off the constant encroachment of the regular trading hours gap, what is going on your mind? I want to think how I want to phrase that. So yeah, it's really a wait and sit, right? So this doesn't indicate to me that we're all the way weak, bearish, we're going to sell off and make new lows. But that's why I am sharing again what's on my mind. Is this 5-minute fair value gap. I'd be monitoring how do we trade inside this fair value gap. We also have a last stop close here before the lower low, so that'd be our bullish breaker. So what I'm really doing is just seeing how we trade there. It's not a day where I just have my opinion readily available to give like on other days, right? So it's really just a sit and wait type of thing. You guys know, especially those of you guys that have been working with me, you guys know what I look for in my trading, right? Clarity top down. Where's the market going? My entry models are going to form in line with that top down analysis. And that's what I'm looking to trade. That's when I'm putting my max leverage on. And that's what gives me the results I get. But on a day like today, unfortunately, just don't have that. You know, are they running it higher? Clear out the buy stops, make lower lows, and then run out anyone that thinks this is a bottom? I don't know. That's why I'm not putting any real financial risk on. But E-mini S&P is trading in its respective new week opening gap. So 1 minute chart traded higher, hit that midpoint level, just really nice delivery, hits that level once more perfectly to the tick. You guys see the high on this candle right here? High is 83.50. Just beautiful delivery. It's hitting that level. Why? Because smart money is engaging at these key levels that I'm bringing our attention to. So we've traded into a short-term discount of this range now, right? We're in this range low to high. Let me take these levels off. All right, so we traded into a short-term discount. So what I'll be interested to see is, do we show a willingness to rally from this discount, right? If we're going to be bullish, that's what I would favor us doing. And then another thing to note as well is look at where the bodies are stopping. What's the low of that? That is the low of that regular trading hours gap. So the bodies are respecting that. We've traded into a discount. How do we trade there now? Do we aggressively rally above that? What other price is it also offering? That line I just dropped on here, that's that 2 o'clock opening price. So remember, I told you guys that price point is going to be influential. Look at how we open, trades right back down, hits that level there perfectly. What's that price? 84.75. What's the low of that candle here? 84.75, right? So it's reacting and using all these key levels that, again, I'm explaining to you guys, it's going to be using ahead of the session. So again, I'm watching how we trade at these key levels. So again, is it just offering a short-term discount, building more stops above here to take it higher? That's what I'm waiting to see for myself. I'll be right back, guys. I'm going to go excuse myself, use the restroom real quick, and then we'll get on and tape read the rest of this PM session with you guys. Be right back. 1 second. Short intermission break. Hold on. Which one is it? Oh, there we go. All right. Momentum trader. Dylan calling central banks, tell them sweep internal and head to the external. Thanks. Yeah, that's what I'm looking for, brother. Looking at the 5-minute chart. Again, told you guys watch this fair value gap. And then also we have that bullish breaker. So what I'm monitoring right now is there a willingness for the market to rally from that level? Or do we melt through it, right? Because if we just melt through it, that's going to tell me something completely different, right? That's going to tell me we reached up into the midpoint, a key level we would look for to read order flow. We were unable to do what? Close above it, sold off. And now if we break through that breaker, that's one of the strongest PD arrays, right? So if we break through that, that's something that's indicating something significant to me. But again, because of the 50-50 nature of this market condition, it's not something I'm willing to promote incurring risk in. Jonathan, yeah, that, and he killed a bear with his bear. Man, Dollar just giving me no types of help today. All right, so we're about to get into that last hour now. So we're about to close the 2 o'clock to 3 o'clock candle here. Going to likely be just an indecisive close. But seeing again on that 1 minute chart, that rejection off that midpoint, that's not bullish, right? Because remember, if we were going to be bullish, the market would have to do what? It'd have to get to it, close above it, and indicate it wants to keep reaching higher. It did not do that. It did what? It stopped on a dime right here at this level. The cool thing is, obviously, we have these levels on our charts ahead of time, right? So we already know what we're looking for. And that's one of the big things I see as like a fuel for impulsiveness, especially for newer traders, is because you don't really know what you're waiting for, right? You're just on the charts hoping something's gonna, jump out to you and tell you when to take a trade. When in reality, professionals, the people that are doing this, that are consistent with it, they know what they're looking for. They know why they're waiting for something, what they're waiting for, and what it looks like when it presents on the charts. And if you don't have at least those three things, you're really just glorified gambling, right? So looking at the midpoint here, seeing how we rejected and sold off from that, that's not very bullish. It's not very bullish. And looking at E-mini S&P. All right, so we're opening that new, again, last hour candle, and we'll go to ES. So seeing how they took this candle up, wicked it, wicks do the damage, and we closed heavily. So what I'll be interested to see is this hourly candle here being an expansion lower. So based off everything the market's communicating to me right now, I would prefer to see them take this market lower into the sell side here and there. All right, so NQ, we have that last up close there. You see how we're closing down through that now? Also looking at the fair value gap here on NQ. Seeing how we close below that midpoint, so all these signatures here are starting to tell me the market's weak, right? And that's how I was able to quickly redirect everyone's attention to the hourly candle, right? And tell you with a pretty great deal of surety that this hourly candle was more than likely going to want to do what? Eat up into the buy stops here. And then through that, we have these relative equal lows in here. All right, so there's that that sell side. Dollars trading higher, so that's going to make for a lot easier drop on the stock indices. So below that low we just took out here on that hourly chart, I'd want to see us aggressively accelerate through that if we're going to make a run for these relative equal lows in here. Man, it would be nice to see it tag up into a fair value gap. So if I was like, again, looking to take a trade and I wasn't able to get positioned in here, and again, we still have this low here in the 73. So there's still 10 points of range to run in down into that low. So what I'd have to do is use like an ultra lower time frame, like a 5-second chart. And this is when that would be useful. And then I would use one of these ultra lower time frame charts to get some type of entry, like a 15-second. So you could use just any inefficiency, right? Like a volume imbalance, fair value gap, whatever the case may be, if you know where the market's going, right? And if it's in a fast market, which is obviously what we're seeing right now, you could use some type of entry to participate in the move. Again, looking at this close here, right? So whenever I'm bringing these key levels to your attention, it's a matter of you learning how to read these markets, right? Because, it goes without being said, right? If you can't read the markets, how are you going to trade them and make money? So what are you reading? Like, what are we looking at? So all these key levels here, right? How we trade into this fair value gap, how we look at that bullish breaker. I told you guys, if we were to close below that, that would indicate something entirely different to me, right? Saying how now we close below that here, and then I went right up to that hourly candlestick, and while we were trading near the open, giving you guys that live commentary, telling you guys, based off what we're seeing now, all the information I've been provided, it's easy for me to see a one-sided run to this low here. And if we're going to take out this low, we're very likely going to want to do what? Run into these equal lows. So I'll give into you guys here real time. But again, calling levels doesn't equate to trading on those levels. Chronix mixes, a lot of buy side liquidity was left. Do you think heading for it tomorrow or possibly Friday? Probably not tomorrow. Tomorrow's probably going to be a very small range day ahead of Friday. But again, that's just the inherent uncertainty of this week, right? Like, I don't have a crystal ball that tells me all the way to the end of Friday. I joke a lot with you guys about, yeah, my crystal ball is dark. But on these days, they can do a lot of different things. On these weeks, they can do a lot of different things. So, I painted the picture for you guys that I suspect they're running into these lows, getting people to feel real comfortable to stop up here to running up there later in the week. But what they actually end up doing with it, maybe something totally different, right? And I don't need to make a career on trading this week. So that's why I just predominantly use it, like I explained to you guys, to just get more information. And then just a really nice, run up into the buy stops. So we're looking again at these buy stops here and here. And then I told you guys before we got up into this level, what I do with this gap, right? How I break it up into quadrants, and then I monitor how we trade at each level, right? So all those different factors right there tell me what I should be looking for and what I should be expecting. Drop into ES. So they left the relative equal lows here on that hourly chart. So they just left that one intact there perfectly. So still expecting to run below that, but just looking like they're retracing it higher once more. Anita, hit that like button, everyone. We'll catch you later. Have a great day. Take care, Anita. Have a lovely rest of your day. All right, so fair value gap, trading up into that, and then we still have the pending sell side here. So be interested to see if do we hit this fair value gap and run lower for the pending sell side. Sheet. Placed to order by mistake. Let me go ahead and kill that right away. So yeah, let me go ahead and kill that. Whoops. Jonathan, 1 mil subscribers. Yes, sir. Haha, very lucky profit. Yeah, very lucky. So yeah, we'll like to see a sell off from that fair value gap. 5. So looking at the 5-minute, I'd favor this being like institutional order flow entry drill. So we have this large fair value gap in here. We just trade up into that 5-minute inefficiency. So like a hit that fair value gap, sell off, run for the lows type of thing is what I'd be looking for. So likely going to see this thing just keep melting. So again, watching that 1-minute fair value gap in here, hit that. Want to see if we want to sell off. So here we have. So we can get fib projections as well from this price swing here on the downside. So below this low here on that hourly chart, right, which is that 48.73 level. So below that low there, how much further can we go below that? We can get fib projections, just measuring body to body. And then that -1 would be a nice target to reach for on the downside through that low. So that's how I use the fib projections. So trading back up into that 1-minute fair value gap, that's fine. Dylan deserves 500k subs, second ICT. Appreciate it, Ahmed. I'm sure we'll get there, just day by day, week by week. You know, we really do have a really great community, and that's been mentioned to me several times. You know, because a lot of other trading communities, people that are in this, it's very competitive business, right? A lot of different people selling services, having YouTube channels, so it's a very, again, stiff, cutthroat competition. You know what I mean? So that naturally brings with it a lot of toxic negativity, whatnot in this industry, and we can see that our community is very different, right? Very different from what a lot of the other communities have going on, and that's because of our community. All you guys that show up, respectful, provide value to other viewers, here to learn, show up, take notes, and better ourselves in the process. You know what I mean? So huge shout out to, our community and all you guys that really make, what we do here great and make Adora Trading Adora Trading. That's all you guys, and really appreciate that. Momentum Trader gifted one Adora Trading membership. Awesome, Tyler. Appreciate that, brother. Wasim was gifted a membership. Yeah, that's awesome. Appreciate you, Tyler. All right, this is the last one. All right, let's see who gets this one. Momentum Trader. May was gifted a membership by Momentum Trader. Trying to get him that LOL. Dang it. That's awesome. Tyler feeling generous. Appreciate you, brother. All right, so again, looking at that 5-minute chart, as we have been, so I want to see this candle sell off. We've already been hanging out in that fair value gap for some time now, so it'd be nice to just see this candle rotate lower and run for the sell stops. So I like to see how none of the bodies are really able to close up into this fair value gap, and how we're staying below it. So it's wicking into it, but it's not even able to get to the midpoint. So that's telling me something, indicating that the market is weak. But right here we do have smooth highs though, so it could run up, take those highs, and then break down. But just reading the price action. Uriel, do you pay attention to earnings? Absolutely, absolutely, and that's something we articulate in our newsletter as well. You absolutely have to be mindful of those earnings, because imagine trading yesterday's PM session, not knowing that Tesla earnings was coming out after the bell, and then you just get stuck in a consolidation, right? That's why we send out the weekly what every trader needs to know, which Tommy, excellent work with, by the way, brother. That's why we make that available. Everything we're looking at, considering, how are we weighing out, considering those things, it's huge. Absolutely, you have to be aware of the big earnings. Really, just the main companies in the large cap composite indices. So your Apples, your Microsofts, your Googles, yeah, the big banks, all those are going to be significant in the earnings world. So you definitely want to be conscious of all those. Absolutely. And again, that's why we cover that in our newsletter, which is free, by the way. And you guys can just sign up to our website, and you guys will be getting a lovely newsletter to your inbox, how we're looking at the economic calendar, earnings calendar, how we're looking at COT for certain instruments. So all that we provide for free value inside of our newsletter. All right, so 320 is So I'd really like to see this thing start making ground now. 315, 345, there's a macro within that price window. That price usually likes to spool and start running aggressively within that price window. So that's why I like to focus on that specific time window. Did signals already start? No, they have not. They have not. We've just opened the enrollment, but they have not started yet. They will start on February 6th, that Tuesday. All right, so looking at the 5-minute chart, just trading back up into that 5-minute fair value gap. Nothing changes fundamentally because we've done that. Right? So it's permissible to do that. The fact that we are having difficulty even rallying up into that, then we'll look at the fact that we're having difficulty even getting up to that midpoint. Even the inefficiency quadrant extend lines, right? Even that lower quadrant, that 0.25. See how it's unable to reach that level? That's indicating to me that this is a really weak market because of these signatures right here. But because I've touched on the fact that we have these smooth highs here now, there's going to be minor buy-side liquidity pool above that. So could they stab up into that and then take it lower? Absolutely. That wouldn't change anything fundamentally for me. All right, so they've traded above the relative equal highs here. That's fine. I want to see how we trade above those highs. So do we hit those highs, sell off, reject, or do we keep gaining ground through that? So we'll see what we have here. So now that we took out those relatively equal highs on ES, I'd really like to see this thing just sell off from now. Same thing on NQ, right? NQ took out these relative equal highs, so that'd be nice to see it reprice lower. So look at the sensitivity around the midpoint. So I want to see the bodies, how we trade there. So if we close above that, I wouldn't be as bearish. Would it make me bullish? No, but wouldn't make me as bearish. So again, just a tape reading study again today. Right, so equal highs taken out. I look at that as like a turtle soup, right? Like a fake run above the buy side. Why? Because we're bearish. We have a bearish draw on liquidity. So anytime we run above an old high, that would equate to new shorting opportunities. Not shorting opportunity that I'm telling you to go short, but that's how that smart money entity looks at the market. So running above these highs, bodies respecting that midpoint level here. Really glad TradingView put in that feature. It was always a pain in the ass to have to put every midline on every rectangle. So seeing how we took out the highs, we're bearish. Our draws down here. Buy side purged. Bodies respecting what? The key level we look for. And now we're going to get likely get that aggressive sell off lower for the sell side here. But again, you know, covering all these things under the context is just a very difficult day. So. So they're taking dollar higher. I'll share with you guys what it is I'm looking at there. H1 DXY. What level is that? Okay, yeah, it's the daily fair value gap. Take that off. So yeah, just nasty consolidation with the dollar. But what I've been watching, you see how they've been taking it higher on this 3 o'clock hour here. So the narrative I painted for you guys on ES and NQ was the opposite, right? I was telling you guys when we were near the open on that hourly candle is likely going to do what? Expand lower. So what I'm looking for on my other monitor here, I have a DXY chart that shows me the daily, hourly, 15 and 5 minute. So I could see that DXY was likely to expand higher as well. But even if I didn't see DXY was expanding higher, just seeing how it is expanding higher, seeing how it is showing bullish institutional order flow from that 3 o'clock hour into where we're at now, seeing that bullishness in dollar helps me trust my sell models in the NQ and ES, right? So that's why I was able to walk this down with you guys here. This hourly candle, again, the majority of the expansion was obviously lower, right? Where we close, I don't care. And that's something I teach on a lot, right? We're just trying to trade expansions that are logical, right? Where is this market likely to expand to? And then once we determine that, well, it's really easy to just, again, go into lower time frames and get an entry model. But you have to know where it's going. Let's say this candle ends up closing and reversing and closes with a bullish close. Highly unlikely, but let's say it does do that, right? It gives us a strong bullish close and we close up higher. Is that a failed analysis? Absolutely not, because the range from this open when we were calling this market lower to where we're at now, that's 28 points in the S&P. That is very good eating right there, right? And that's all you need. We don't even need that best case target. Still thinking we get there, right? They're just consolidating it here and then still likely going to drop it lower. Hey Dylan, could you explain why can you explain why you think it will be a run lower without filling the fair value gap? Yeah, so for me to expect it to go higher, I would have to be bullish, right? And which I'm not. So if I am bearish, which we've determined after we rejected the key levels, closed below all these key levels, I don't want to see the market trade higher, right? Because if it does trade deeper into the inefficiency, that tells me we're not as bearish as I think we are. So I don't like to even see these gaps fill in. And that's where just experience comes in. And again, just being taught the right way to do it, right? Because we think, oh, gap, it has to trade up in and fill it. Well, not if there's still lower targets to be met, right? So it's just about knowing really what you're doing, what you're looking for, and why you're looking for it. Momentum trader, I'll get 4 more sub when it takes outside liquidity. Awesome, Tyler. Let's make it happen. All right, so let's all collectively make our selling pressure, run it through that sell side. Man, I gotta be careful, man. CFTC is gonna be here thinking I'm front running. You know, believe it or not, people actually think that. You know, people with like large followings, they'll get on and they'll all say like, oh yeah, we're gonna, you know, muscle the market just like the you know, AMC, you know, the meme stock, you know, shenanigans or whatever. They think that their collective buying and selling is actually going to reprice the market, right? So what a lot of people get in trouble for is called like front running, where they're going to tell everybody to buy this stock or their entire, you know, large following. We're going to buy Apple at 150. And then they're already buying it early on. But then when they tell their community to buy, then it runs the price up. And that's, you know, what that's obviously highly illegal, right? You know, in the eyes of the CFTC. But, you know, with what we know, isn't that just laughable? You know what I mean? That we're going to muscle around Apple, right? Or the S&P 500, right? It's just, it's ridiculous. Disclaimer, absolutely, yeah. No, this is all under the guise of my opinion and education, absolutely. Also, look at my short deal and I'm running the market down. Yeah, there you go. All right, so once they run out that low here, I'm gonna go ahead and get off here for the evening. I have to get on with the premier gentleman with my client group, so gonna get off the screens, get some fresh air. But once we run to that sell side, that'll make me content for this live stream. See our targets hit. Still, even on a difficult day, still calling key levels, right? Seeing where it's turning from, why it's turning from these key levels, and again, looking at that NQ, looking at that random high up there, right at the 0.5. Highly algorithmic markets, breaks down. Again, we were monitoring on a 15 on this asset class as well, how we trade inside that fair value gap and breaker, and we closed down through it, right? So that, again, gives me the insight that as soon as we start trading here on this candle, which is 3 p.m., it's more than likely going to do what? Expand lower, right? So it's a matter of reading all these things, weighing out order flow to then know where the market's going to go, right? And that's just something that experience teaches you. Working with somebody who, again, knows how to call the market, knows what they're actually looking at, right? And is able to guide you through all that. And that's just, again, how you get this skill set transferred. That's how you get the experience. That's how you learn how to do this, is, again, working with somebody over a duration of time that knows what they're looking at, why they're looking for certain things, when to be patient, when's it going to be hard, when's it going to be easy. You know, all those things are taught by a proper mentor. Earl, Tyler, those lean hogs must really be paying. Yeah. Yeah, my man Tyler been banking off the lean hogs. In here, got that lean hog money in the YouTube chat. Ahmed, it was an absolutely beautiful and professional market commentary as usual. Dylan, honored to be amongst the lucky subscribers. Appreciate you, Ahmed, man. Been in here working hard since day one, brother, and appreciate your continuous support of everything we're doing here, man. Big things coming for you, Ahmed. Big things coming for you, brother. Ahmed, appreciate it once again. Have a great rest of your week. See you Sunday. See you on Sunday, brother. All right, so all this, again, carnival ride in the beginning. But look, you know, once the main intervention stepped off, for the most part, it's not that hard for us to read the market, right? So ever since we started trading at 3 o'clock, we had that clarity right away on where the hourly candle was going. So qualifying these things, you guys, real time, right? We're looking at this fair value gap, how we trade there. Told you guys on the 5-minute chart, I want to see this be what? Institutional order flow entry drill. What is institutional order flow entry drill? Where it does not even reach up the midpoint. See, it didn't even get the consequent encroachment. That's institutional order flow entry drill. How do you know that's going to happen before? I'll teach you guys that later on. But I didn't do that. Dropping down to 1 minute just to refine that further. Equal highs, told you guys it could run up there, but where does it have to stop? The bodies have to stop right at that midpoint. Probably not random. Called that turtle soup, fake run above the highs. Why? Because we're bearish. The market's running down here. So each run above a new high, that's what? New selling opportunities. And then breaks down again, bodies respect that level. So wicks can color outside. Bodies are going to tell me the story. Takes out the equal high. So anyone that had stops trailed here on this run lower, they've been taken out. Market runs lower. And watch it come home to Papa. Ahmed was gifted a mentorship. There we go. There you go, Tyler. Yes, my man Ahmed. And you know what, Tyler? What's even cooler, bro, is you said after the sell side. But the cool thing is, our confidence, we know the sell side is likely to be booked. So perfect timing. Perfect timing, my man. Love to see it. Love to see it. Christopher, thanks for today. Absolutely, bro. Pleasure's all mine. Gary, do you have a video on turtle soup? I do not. I do not. Turtle soup, simply put, where's the market going? Higher or lower, right? Once you determine that, it stops in the opposing direction of where you think it's going. There's your turtle soup. Gary, do you have a video on turtle soup? Okay, I already covered that. It's going to run hard at that sell side. Absolutely. Yeah. And then through that sell side, as I mentioned, we got some fib projections we could run, and this thing can just really start accelerating into the close. So we have the sell side there, and then we have that -1 that I'd like to see on the downside. So we'll see. ZSG, what's your view on higher time frame bias? Like, what's my higher time frame perspective? I don't know. I don't know right now. I'm not calling a top, but I also don't want to short this thing. And that's like a longer term. Can I short intraday for like a scalp here? Like if I wasn't here with you guys, that's probably something I'd be trading. But longer term, I don't know. We're going into a new week. We have NFP. Once we have all that behind us, and then we get into the month of February, I'll have a lot more clarity in terms of a higher time frame. But the big thing is dollar. Like I need dollar to get its act together and expand out of this consolidation. So that's what I'm waiting for. All right, guys. So let's all witness this active randomness. Zoom all the way in here to this low here. Watch it run down into that. Congrats, Ahmed. Glad to have you part of the YouTube membership. David, as always, best commentary on YouTube. Thanks. Absolutely, David. Appreciate you joining us, my man. Jonathan, how many trades per week? So asking questions about signals. Yeah, I'll get to that in a moment. Julio, Dylan, this was all random. Stop doing this every time. Yeah, I'll try. It feels illegal to know this, right? Like I almost like I can get in some type of trouble. Jonathan, how many trades per week could signal service anticipate, or would you advise it's best as price develops? No forced signals. Absolutely. Yeah, Jonathan. So it's going to be a week by week basis, depending highly on that economic calendar, the clarity I have on the higher time frame. But we'll definitely be getting in at least 2 to 3 days, 3 to 4 days a week signaling, depending on what we're looking at for that week, economic calendar, higher time frame clarity, all those things that I'm teaching you guys, right? So all those things are going to factor into what weeks I'm pushing it really hard, what weeks I'm not. But we will be trading more days out of the week than not. And again, you already know my protocol very well, Jonathan, since you've been here for quite a while. So what I constitute as high probability, those are the days we'll be in there getting to work on signals, brother. I was going to keep explaining, but then I'm like, you already know what it is that we're doing clear enough here, Jonathan. AB, so illegal, you should have cuffs on, yeah. Alex, hypothetically, where would your entry be? This 1 minute fair value gap, I would just be selling short there if I was trading. And the next question is, so it's like every time I answer somebody's question, just brings 50 more questions, right? Well, why there? And why wouldn't you expect it to trade higher? And, you know, I get you. But no, if I was trading, my entry would be on that fair value gap as we're trading up into that. Trusting everything I teach you guys here as to why I don't even want to see it get to the high end of that fair value gap, right? And then if I missed that entry, then the turtle soup would have been the nice short right there, because it stops inside of a PD array when I'm already bearish. And then just that would have gave me my 15 points. So trader would be paid by there. And then if I missed that turtle soup, then I would have to sell short in one of these inefficiencies here. And then that would be like a last ditch short before the bus just runs off. AB, my man. Good to see you, brother. Dylan, thanks for the live stream. Absolutely. Jonathan, say less. Absolutely. You already know what's going on, Jonathan. Noah, so much for those protected lows. I'm not really sure what that means. Saludos de Venezuela. Yeah, sellers coming in a bit. Yeah, so watch. We're going to see the seller step in here real aggressively. So the selling pressure is about to rip this thing through these lows and into the sell side. One of the characteristics that the market, again, likes to do a lot, which is really sell the idea of support. That's something that with experience teaches you. Like they'll stop it just short of like this obvious sell side liquidity pool, right? Which is these equal lows that we've been watching this stream. So it'd be like an obvious sell side liquidity pool that, you know, we're targeting, right? Because stated very clearly to you guys that we are not support and resistance, right? Looking at the lows in here, we're not looking at it like it's going to hit that level, bounce, and trade higher, right? Painted the picture that when we're looking for lows, it's trade to, through it, and rip through it aggressively, not use it as support. But they try to sell that idea, right? So they're trying to sell the idea. This is my internal dialogue, right? So they stop just short of that low, build these relative equal lows here, and then they trade it higher. So that's, in my opinion, inducing people to get this market to think it's likely going higher, when more than likely it's not. I mean, it's never a guarantee, right? That's going to get below a specific level. We're just dealing with probabilities here, right? So the market likes to do that characteristic a lot, where it'll then retrace right before getting to a key level, just to really sell the idea of a bottom. And what it's also doing is it engineers more sell side liquidity there, right? Because more speculators are looking at that as what? Support. So if most speculators lose and they're looking at this as support, how do we want to look at that, right? Completely opposite, diametrically opposed to that retail trader. I was hoping to give me that sell side so I could get on with my day here. Man, how long's this? How many more sell stops do we need there, right? Vlad and bro, your patience of tape reading and not trading is admirable. How do you do it? Just discipline. Losing my ass a lot early on. You know, all those things contribute to forging discipline and patience, right? Because eventually it just comes a point in time where you just have to sit down and realize, like, wow, like the dumb shit I'm doing, like this, this just can't continue, right? Like it's preposterous what I'm trying to do. And then, you know, once you have that realization, which every successful trader has, right? Every successful trader eventually realizes that, wow, like all this stupid shit I'm doing is actually just holding me back. So, you know, once you want to become professional, once you want to become consistent in this, you have to be consistent yourself. So until you find that consistency within, it's going to be very hard to find that consistency in the marketplace. Because all of our worst personality traits, character flaws, are just going to be amplified times 100 in trading, right? So one thing I had to do to become a successful trader is I had to completely reinvent myself mentally, physically, my habits, everything had to change for me to be successful in this. Because how we're taught to think, how we're trained to think through the education system since a young age, through the entertainment, the way we're taught to look at things and see the world, see trading is completely ass backwards, right? So you completely have to restructure your mindset, how you look at this, how you perceive what we're doing, because all those things are going to contribute to your success. Because for most people, again, finding success in trading has nothing to do with the concepts, right? It's just the battle, the war that we have between our ears every single day. So the better you get at winning that battle between your ears, your trading's going to get much, much more consistent and easier. Jonathan, which is why his approach to trading is also contagious. Stick around with him and it wears off on you too. Awesome, Jonathan. Glad this is providing some value to you guys. And if it is, again, be sure to help a brother out and hit that like button for us. So these are the points in times when like I'd be in a trade, I'd be short, right? Looking for lower prices. And man, this just consolidation here when you have a limit order sitting right there. This 1, 2, 3, 4, 5, 6, 7, 8, 12 minutes here just feels like an eternity, right? It feels like we've just been here all day, especially when you just have a limit order sitting down there. So that's something I am thinking about if I was trading this. Smith, man is preaching. Appreciate you, Smith. Appreciate you. Vlad and Wisdom took notes. Gracias, amigo. Like and sub. Thanks, my man. Thank you very much. All right, if they don't take out that lows, if they don't take out those lows, rather, before 350, 350 is just going to be the rocket fuel to send us into the lows. Take a look at old NQ. Yeah, so NQ is consolidating right below its lows there. So what does that look like? Relatively equal lows. All right, and there's our sell side. So 48.73.50. I guess we just got really lucky. We happened to time all the selling pressure today and happened to guess it right. So Momentum Trader gifted 5 Adora Trading memberships. My man. Appreciate the support, brother, and everyone else is stoked, man. Giving out the memberships. Appreciate you, Tyler. Appreciate you, brother. Smith, what do you suggest to improve trading? Mentality, psychology, and being patient. Being disciplined. And finding not only discipline in your trading, but in every other aspect of your life. Because if you're not disciplined in every other aspect of your life, that's going to bleed into your trading, right? Can't get to bed on time, can't get enough rest, can't go to the gym, don't have discipline in other areas of your life. That's going to bleed right over into your trading. So my suggestion would be, if you want to be consistent in trading, be consistent in everything you do outside of trading. And that's what's going to allow you to be successful in your trading. Perfect timing. Magician. There you go, Tyler. I got my bro Julio. Nice. There you go. How do I claim one of those memberships? So for the memberships, I think you just hit join on the YouTube channel. I think it's if you're on mobile. I think maybe it's just Apple mobile, I think. And again, I don't know. I know definitely on the computer, you're able to sign up for the memberships. And that's just something I use on the Sunday live streams, or whenever I'm live streaming here and I'm answering questions, I'll look for that little logo. Because if you purchase that logo, it's like $5. I think it's like less than a cup of coffee. But what I'm doing is I'm looking for that in the comments. So those of you guys that have signed up, I gravitate to those questions more, especially when the chat's just, I go to the membership questions. Just the people, again, just show me they want their questions answered. That's all. Nothing special, nothing overly special. And it's just a great way to support, what we're doing here, right? If you find value and you sign up for membership, that just helps us out. and keeps us motivated again to want to keep doing this. Appreciate you, Tyler. Sean, when is your signal service? All right, so 350. We're in that 350 window right now, so I would expect acceleration through the low. Take a look at NQ. So yeah, MQ has these relative equal lows here. That's too clean. Want to see us wash out through that. And then looking at, yeah, so yes, hit that run there. So right, so this would be like the setup we're looking at. So fair value gap down to the sell stops here. 17 points. Not bad for FOMC. And then through that sell side, that -1 would be a nice target on the downside. Let's see. About 5 more minutes left, so I'll hang out with you guys till close. When is your signal service opening? So I already covered that. February 6th. The subscription, for those of you guys that already want to get signed up, that is already open. Matthew Davis was listening a bit in the background, took it on 1 mini, great delivery. Yeah, it was. Usually, like I told you guys before, and it's cool, like, because I'm not just here blowing smoke, right? I tell you guys exactly what I'm looking for and the time I'm even looking for it, right? Remember one of the times I told you guys, when do I really like to do my trading? FOMC, that last hour candle. Tell you guys what I'm waiting for, which is what I want to see where that hourly candle is going to expand, right? So did I not paint that narrative when we were here at that opening price that this candle was likely going to do what? Be an expansion lower. So again, painting that narrative to you guys real time, why we're expecting that, and then covering what a theoretical entry would look like on tape reading, right? Equal highs, you can short the fair value gap, but a stop would need to be above this fair value gap at least. Ran above the highs, qualified that as a turtle soup. Told you guys where should the body stop. Stops on a dime. Trades lower. Call for the equal lows. Just like a dog and a whistle, right? I whistle, it comes running. So, and then runs right into the sell side there. So the only thing I'll be interested to see, just to feel a little better about myself, would be just that -1. I'd like to see if they want to run into that target. That would complete this session for me. Matthew Davis, heard you talk about this recent short. Yeah, that's what we were looking at. We were looking for lower prices, and again, painted the picture to you guys as to why when they take it higher, what's that building there? More sell stops. Getting people to view that low as what? Support. Same thing here. What are they doing there? Getting people to see that as support, only to do what? Rip down into it. So even on FOMC, walking it on a tight leash, huh? Anthony, thumbs up from me. Like, appreciate you, Anthony. Thank you very much, sir. D Patel, thanks, Dylan. Absolutely. Lobo, hey champ, is there still a spot to get into the mentorship program? Unfortunately not, brother. Unfortunately, mentorship, the ship has sailed on that one, brother. But for those of you guys that do want the opportunity to learn from me, learn what it is I'm doing here, learn the logic that I'm displaying with you guys real time over real-time market data, which can't be faked, right? I cannot control the S&P 500. You know, unfortunately, I wish I could, but unfortunately I can't control the S&P. But everything I'm using here, everything you guys see me use when I'm calling markets real time, is all everything I teach to my private students, right? So it's not enough to just be able to talk about the left side of the chart. You have to be able to know what that right side of the chart's going to do, and that's how you command respect in this industry, right? Because there's a lot of clownery, there's a lot of goofballs all over the trading industry, right? And if you were to ask most of them to sit in front of you live and call the market, they wouldn't do it, because then, you know, the jig would be up, right? People would realize that they actually don't know what they're talking about. So this is everything I teach in education. But going back to that, for those of you guys that unfortunately missed the boat on mentorship, which was a lot of you. I'm getting a lot of emails from you guys and messages, but unfortunately, that's already been announced and that's already underway. But again, for those of you guys that do want to learn, we may be having new education opportunities in the future, but that's all I can say on that right now until we get that solidified. So something to look forward to for those of you guys that unfortunately weren't able to get in on the mentorship. What's the next target for Bitcoin? 0. I don't know. Why doesn't it retrace into the breaker? It doesn't need to, brother. Doesn't need to. So looking at the 5-minute here, we covered why. Well, not at why, but I said we want to see us be IOFED, institutional order flow entry, Joe. So the fact that we didn't even trade up to that breaker, market is really weak. So wouldn't even need it to trade up into it, right? Because the market is bearish. There's stops here. It's going to run for those quickly. And the fact that it didn't even trade up to that breaker tells me what? The market's really weak because it's unable to even get up to that level. But 356, market hits our targets. Called that last hour. Abraham, what, we have some pretty good clips for social media, brother. What do you think? And other than that, was getting asked a few times about the signal service free trials. There you go, right? There you go. And there's a plethora of these videos of us doing live streams on our YouTube channel. Am I right every time? Nope, don't need to be. Trading's about being right more than you're wrong, right? And that's what makes a profitable trader. So you want a free trial for signal service? Here's our YouTube channel, right? So I hope you guys found this video insightful. I think that's going to be it for me. I'm satisfied with what we saw in this session. Hopefully, again, you guys got some insight from this. And I'll catch you on the next one. Have a great rest of your day. Good luck and good trading.